If you've been watching the housing market this summer, you've probably noticed something that seems contradictory. There are more homes for sale than we have seen in years, yet fewer people are actually walking through them. That's not a mistake in the data, it's the defining story of the DC metro market right now. July brought a wave of new inventory to the region. A total of 5,000 new listings hit the market, up 3.3% from July of last year. That pushed active listings at month's end to 11,000, and 11.2% increase year over year, and the highest inventory level the DC area has seen since 2019. On paper, that sounds like great news for buyers. More choices, more negotiating room, less competition for any single property. But the follow through isn't there. Showing activity, the number of home tours booked across the region, actually fell 4.7% in July, even as the pool of available homes grew. New pending sales told a similar story, down 4.2% compared to last year. In other words, sellers are listing homes at a healthy clip, but a meaningful share of would-be buyers are staying on the sidelines. So why the pullback? The most likely explanation is that discretionary buyers, people who could move but don't absolutely need to right now, are pumping the brakes. Rising mortgage rates and broader economic uncertainty are making a lot of moderate income and first-time buyers think twice about jumping in. For a buyer whose monthly payment is already stretched thin, even small rate increases can be the difference between let's tour this weekend and let's wait and see. That pullback in casual shopping is a big reason tour volume dropped even as inventory climbed. The homes are there, the urgency for a lot of buyers isn't. Not every segment of the market is slowing down though. The upper end of the DC housing market continues to significantly outperform the rest, and that resilience is doing a lot of the heavy lifting on price. Median sold price in July was $650,000, up 1.6% year over year. Gain is being driven largely by high-end buyers who simply aren't as sensitive to interest rates or sticker price. Whether it's cash purchases, larger down payments, or simply more financial cushion, this group is still actively buying, and their continued activity is keeping upward pressure on prices even as overall transaction volume softens. While the market as a whole is cooling in terms of activity, it's not cooling in terms of price. Looking ahead to fall, there is reason to expect this pattern to continue or even intensify. Mortgage rates could tick up further in the coming months, and early signs point to slower than expected sales activity in the third quarter. If that plays out, we'd like to see continued inventory growth as sellers keep listing, but fewer buyers absorb the supply. Persistent softness in tours and pending sales, especially among rate-sensitive buyers. Prices holding up better than volume, propped up by high-end demand. And a widening gap between the experience of luxury buyers and everyday buyers in the same market. The bottom line, the Washington DC metro housing market in July isn't a market that's collapsing, it's a market that's splitting. High intent, high capacity buyers are still moving forward with confidence, and that's keeping prices resilient. The broader base of the market is increasingly priced out or priced cautious, and that's showing up clearly in tour and pending sale numbers. For buyers with flexibility and strong purchasing power, this remains a market with real opportunity, more inventory, less competition, and sellers who may be more open to negotiation. For everyone else, patience and a close eye on where rates head this fall is the name of the game.